Hey, how's it going, everybody? Welcome to Swing Trade Newsletter for 10th January. Hope you guys are doing well. And let's get started. So, what a crazy 2021 so far, right? 2021 seems to be pretty much a recap of what we saw in 2020. I mean, obviously the year changed, but it's a whole lot of shit show when it comes to 2021. But what's interesting is the stock market doesn't really care, right? The U.S. reported over 10,000 deaths. The Capitol was stormed into. The election thing all happening. Free speech being censored by the social media companies and other big tech. And then we had obviously all the geopolitical stuff happening, the new strain of COVID, lockdown still going down, but the stock market all time highs, right? It's such great, such great news. Stock market all time highs. I mean, this is unprecedented. I mean, because honestly, if all these things that are happening right now, what I just mentioned, right, lockdowns, death, censoring, capital being stormed, election issues. If all of that happened, let's say 3, 4, 5 years ago, I mean, literally, stock market would have crashed like nothing ever. This time, stock market doesn't seem to care. I mean, it's just basically going up, and partly that's there's a variety of reasons for that, and one of the main reasons, obviously, is that the Federal Reserve keeps printing money, keeps pumping money in the market. The other reason is that the U.S. dollar is obviously losing value a little bit, so the U.S. dollar is going down. As you can see, it's been downtrending. So when the US dollar goes down, what happens is it's easier for foreign investors, people in India, China, Brazil, Russia, right? Because the dollar is cheaper for them. So it's easier for them to invest in the US market. So a lot of the international money is flowing into the market. So, based on a lot of those reasons, and also potentially a bubble being created here, which, is kind of scary when you look at the monthly chart. But I mean, based on all those reasons, stock market, however, still keeps going up, and that's how tops are made. Whenever a top is to be made, the top is never made in a market like just randomly, right? It's always you go through a period of consolidation, then you go to like a nice uptrend, and then you get a little bit vertical, and then you come in. So we have that same situation. So we're almost vertical here on the spider. So pullback's definitely on the cards. I did some extension analysis, and looks to be like 390 is where we're probably going to run up into. So I don't think we're going to pull back immediately, although we are really extended from the 90 MA. So pullback's definitely on the cards. But the way it's looking right now is that the market might want to go up a little bit more, maybe into 390, 400 area. And then from there, we could potentially get a pullback. But again, you know, predicting pullbacks or anything, I mean, that's just a fool's game. We just got to trade the patterns that we see. That being said, I am personally being really cautious, going long, which really annoys me because it's the beginning of the year, right? 2021. And I'm looking at my swing trade watch list, and I'm not even kidding you guys. Like, I am seeing so many good setups, right? I'm seeing so many of my favorite pattern setups, so many of my favorite trade setup. I mean, literally right now, if I wanted to, I could call 30 to 40 new swing trades on the long side, and all of them are amazing looking. Like, I really, really like all of them, right? And I could literally go ahead and call 20 and 30 right now. But the back of my mind is a thing, which is like, do I really want to go take extra exposure in the beginning of the year of January where markets are extended, a pullback is on the card? Do I really want to take a lot of trades here and, potentially get off to a bad start to the month? That's a tough part. And when I look at the monthly chart, I'm like, do I really want to go a long swing trade when the markets, literally look like that? So what if we get into 3, 4, 5 long positions and then the market starts pulling back, and now we take potentially a pretty decent loss on our position. So for that reason, I'm being very careful in any long positions that I may call, and I don't really want to call any, to be honest. And so my suggestion is pretty simple. Like, as we are away from the 90 EMA, I don't think I really want to go long swing trades. When we pull back to the 21 or the 50, okay, then we can start potentially going long. So we're not even looking for a big decline. I'm just saying that, hey, the market pulls back, let's say for example, here, 21 EMA, okay, you go long swing trades. You stay out of long swing trades when it's away from the moving averages. When it gets to the moving averages, okay, maybe you can start putting in some long positions. No long positions, long positions, no long positions, long positions, no long positions, right? And then we pull back over here. Okay, now we can start looking at long swing trades and then, get out of them as we move up. So that's the nature of swing trading. So even though, I mean, I'm not even joking, guys. Like, I did a scan and I'm like, oh, I have such a FOMO right now. I literally have such FOMO because a lot of the trades that we were looking at or I was looking at last week, a week ago, they're all starting to move exactly as how I predicted. I'm looking at my watch list right now, and there's just so many good swing trade long ideas, but I just can't get myself to go long in this market. Number one rule for traders is risk management. All right, so you got to keep that in mind. Taking a look at the market internals S&P, so you can see here what's interesting, that the reason why I think market might actually go higher towards 390 is because you look at the McClellan oscillator. Yes, it's starting to tick up a little bit, but it's nowhere near overbought, right? I mean, when you get around 100, 150, to 200, that those are the extreme overbought levels, between 100 and 200. So we're kind of neutral, which makes me think there's more upside to be had on the market. And then yes, when the McClellan oscillator touches this anywhere over 150, that's when I'm probably going to short the market and look for a move to the downside. But right now we don't have that. All right, so that's kind of where we stand here on the markets. Let's jump in to the open positions that we have. So we are still in this GCI. We got into this stock long at $3.06, which was basically right over here. And after us getting in at 306, it popped up the same day over 380. It was looking awesome. Then it pulled back. We raised our stop, and then it went up. We raised our stop, and then it pulled back, and it went up again. So we kept raising our stop. So we're still in this, and I've kept raising my stop loss, and in the hopes that, okay, it can hold, and it can keep grinding up. That's basically what we are hoping. So our stop loss now on this one is 324. All right, so our stop loss has been raised now to 324, which is basically under this green candle's low. And the reason for that is if you go on a 65-minute chart, 324 is where we've raised our stop, which is right over here. And the hope is that it can eventually break out above this 360, and then we can raise our stop again, somewhere over there. So right now I'm keeping the stop at 324, and hopefully this thing can, move higher. So GCI is a trade we're in, but we're not going to lose on this. We're going to make at least some money on it because it stops above our entry, so that's good. On the next flip side, we have NVIDIA open position short. So we shorted NVIDIA. Looks like we kind of got sucked into it. We shorted it on this day right over here. Put our stop loss above this tail and big red candle that day. And the trade looked really good. I was like, okay, this is looking amazing. This is going to go right down. But it came right back up again. And that's simply because look at the market, right? But the market just keeps going up. Eventually, shorts get sucked into and start going up as well. So this one, I'm no changes here. I'm going to maintain my stop loss at this tail. If it holds, great. If it doesn't, then we take a stop, right? But my hope is that, maybe next week if the market can pull back, this thing can come down. But if not, we're going to take a full stop. I don't want to lower the stop loss on this trade. All right. Next one, we have Twitter. We shorted Twitter on Friday. Looks like a really good entry. We shorted this at $52.30, basically at the open on Friday. We put our stop loss above all the way up here at 56.12. So pretty big stop. I mean, we could have used a tighter one, but I get a 56.12 stop, and I'm actually looking for this thing to potentially come down into the 200 period moving average around like $40, which is the next area of support, and also the 200 MA on the daily. So that's what I'm looking for, Twitter to come down. And I think after hours, Twitter was down quite a lot. Let me take a look at the 15-minute chart. So yeah, if you take a look at the 15-minute chart, you can see after hours, Twitter's actually down to 49.50. And so that means on Monday, Twitter is probably going to gap down. So on Monday, Twitter is probably going to gap down, and we'll see what happens with that. So the technical reason for shorting it is here. So the reason I shorted it technically is you can see here, running up straight, right? You can see last time it ran up, what happened? Ran up, boom, pull back, right? Same here. We ran up. So we've been running up for a while. That's number one thing. Number two thing, where is it running up to? Look to the left, right? This was resistance over here, resistance over there, resistance over here, and now it's ran up into resistance. So our stop loss is basically above this resistance on a monthly chart, right? Entry was over here. And then the target, which was at what I said, around $40, there's some support around 44. So that's probably going to be an area where I'm going to take my profit around 44 bucks. So that's where the thing is. Now, obviously, recently, as you guys saw over the weekend, the reason Twitter is down is because they banned, President Donald Trump from Twitter. And obviously not just Donald Trump. I mean, I was kind of doing my research on Twitter and came out. It's actually not just Donald Trump. They actually banned a lot of I guess Republicans, a lot of conservative radio hosts, and all those people that were in that circle. They banned actually a lot of them. And while I guess Iran's leader is tweeting death threats to the U.S. and apparently that's allowed under Twitter, but not anything else. So, so what that's caused is a lot of backlash. Again, I'm not talking politics here. I don't like talking politics, but what that does is it's caused a lot of backlash, right? Because I mean, think about it. Trump had 80 something million followers on Twitter, right? And mostly people logged into Twitter to see politics based news, right? That's why most people logged in is to see politics based news on the Twitter, right? Now, I mean, Donald Trump, you can remember, right? Before 2016, look at 2016 election, right? Look at 2016, all right? So this is what I want you to know is 2016, Twitter was a dying company, right? Twitter was basically a dead company. Stock was going down from like $70 down to like less than 16. Twitter was a dead company in 2016. Donald Trump actually made this company money, right? Because this 2016 election happened. Donald Trump jumped on Twitter. Everybody wanted to see what he's tweeting, right? All the news outlets, and Twitter became a popular platform again. And so basically, Donald Trump actually made Twitter money, right? 2016, it was dead. Twitter was dead. It reignited because Trump was tweeting everything, and Twitter became a whole new thing again. And now, they have banned him and a lot of other people. I mean, combined, the following must have been over like 400 million, right? And all of those followings of people have been banned and people have been removed. And what's happening is people are now leaving their platform. Now there's new platforms like Parler, right? Parler is a new platform. There's another platform, Gab, Gab, Gab. So a lot of people are leaving Twitter and getting on Parler and Gab. I mean, the CEO of Gab told, reported that he's getting 10,000 new users per hour, and Twitter is losing users per hour, right? So again, that's going to show up in their next earnings report when they see the number of users, active users, is down, right? So then what's going to happen? Ad revenue is going to be down because advertisers don't really want to advertise when you have less users than you had last month ago. So because of those fundamental reasons combined with this technical reason, I think Twitter is going to be in pretty big trouble. And I personally, I mean, even though we're swing trading it down to here, I mean, I'm thinking about potentially buying some long term puts and just holding it. I think Twitter eventually will probably come right back down into 20s, $20, $25, because again, just do the math, right? Why did it stock go up? Number of users went up from 2016. Those users are leaving now, going to Parler and get on Gab. So that's obviously going to result in a lot of problem for this stock. And, so that's what we were thinking. So that was the monthly trade that I took. And basically we shorted under this daily base under the 21 EMA and looking for a move down into here. So we're going to probably take our target around $44. Maybe, and maybe we'll see. I mean, if we get a big gap down on Monday, let's say to 48, okay, maybe I could be tempted to take like a third off. You know what I mean? So, for example, if you have 300 shares short, maybe we take 100 off, right? So that's my plan. Is that if we gap down to 48, okay, at the 50-period moving average, maybe we take 1/3 position off. Maybe take a 1/3 at 44, and then maybe we're gonna hold 1/3 for a bigger move. But again, I will keep you posted. But that seems to be the plan as of now. So that is Twitter. That's another short position that we're in. So we're in Nvidia short, Twitter short, GCI long. And then on Friday, we also got into another new trade long, which is the AUPH. So we got into AUPH long. So the reason for this one, this is a different kind of a play. So again, if you look at the daily chart, you don't really see much. It actually potentially looks like a breakdown. But the reason I traded this is actually the monthly chart. So you can see on the monthly chart, it had a pretty big move from like $4 up to 22, and then it pulled back, right? And it's trying to set up it's trying to set up like a monthly flag, right? It's trying to set up like a monthly flag type pattern here, and basically it came down into the 21 EMA on the monthly chart, and that's kind of where we sneaked in early, thinking that okay, if next week it puts in a green candle, it could break out a flag. Now we're in early into a potential breakout. Now, the risk with early entries, obviously, is that you might have timed it wrong, and that's the thing you have to live with, right? As a trader, the con of early entry is you have a tight stop. So you could easily get shaken out and the trade could still work, or timing might be off. But if the timing is right, I mean, this could be a pretty big reward to risk trade. And that's kind of what I traded it based upon on the monthly chart. And then on the weekly chart, you can also see on the weekly chart, this is kind of a pretty decent support area. So I'm just hoping for a move higher. So we got into this thing at 1330, a stop under 1294. And, trade overall looks okay. I think after hours, this thing was up. Not really, yeah. We went up to 1360 after hours, pulled back, closed on 1345. So overall looks good. Basically, the thing for this thing to do would be on an hourly chart. If I remove the extended hours, yeah. So in the hourly chart, we do have a look of a potential, like a double bottom situation. So hopefully this thing can move up here and then start making a move. So on this one, we're gonna look for 1439, but that's gonna be a target for only 1/3 because again we're playing the monthly chart. So I want to look for a 1/3 target around 1439 area, somewhere around over here, and then 2/3 we're gonna hold to see if we can maybe get a much higher price. So that is the AUPH. That's a long position we are in. All right, and now on to the new trades. So I got 4 new trades for this newsletter, 3 on the short side and 1 on the long side. And so let's kind of go over them. So one of them I have is Apple short. So Apple, I'm going to basically look to short under Friday's low, right? So we're not going to short it at the open or anything like that. If it goes higher, let it go, right? Let it go higher. The trade will be if it takes out Friday's low, so right over here, with a stop above these highs. And then I'm looking for something like this where it went down, right? Tried to go up, and then it fails, and then that becomes like a lower high, and that's what I'm looking for, a move down. And the trade is also based upon, as you can see, a double top on the daily chart and the monthly chart. Look at that. Monthly chart's like really, really extended, right? And on the extended monthly chart, you got a double top. And then also, if you take a look at the weekly chart, okay, on Apple, you can see it, to me, it looks pretty bearish with these topping tails and then this big tail over here and double top. So again, if it goes higher, then great, let it go higher. Who cares? We're looking at short under Friday's low in case it doesn't go higher, and then that could be a double top entry. So that's one thing I'm looking to do. Okay, on the long side, I have MBIO. A full disclosure, this is actually a trade I'm already in, but not a trade. I'm actually in it as a long term, but I'm also going to swing trade it with the newsletter. Okay, so this is stock I already own from before. I think I'll let you guys know in the Live Traders group. If you're not in there, you should get in there. Go to livetraders.com. If you log in, there's a swing newsletter group. So sometimes I post other things over there. So this is a trade I'm already in. I bought it as a long-term trade. And the reason I bought a long-term trade is because you look at the monthly chart, it's straight down and then consolidating, creating a lot of support around 250. And actually moving averages are curling up. So it looks like it wants to go higher long-term. So this is one that I own. Not a lot. I own just 1,000 shares of this thing as a long-term portfolio for a target much higher, maybe $9 or $10 target. But for swing trade, I'm also going to swing trade it with you guys. The entry is going to be over here, right above this resistance, stop loss under here. Then we're going to look for a move higher on MBIO. So that's a only long trade for this edition of the newsletter. All right, next one. Next short I have is Peloton. So again, Peloton, as you can see right now, looks like a buy setup. Looks like it wants to go higher. Guess what? If it goes higher, let it go higher. Who cares? I'm going to look to short if it fails and takes out Friday's low. So Friday's low is at the 9 EMA. So let's say if instead of going higher, it goes lower next week. Well, now we have a lower high, lower low. This could be a next lower high, and this could be a next lower low. I'm looking to short it like that, under that low. And the reason for that is, you look at the monthly chart. This monthly chart is crazy. Not a single red month, right? Look at the weekly chart, really extended as well. So I'm looking to short Peloton with a stop over this red candle, and I'm going to look for a move back down. So that's going to be Peloton. I have another short trade. This is MDLZ, Mondelez International. So this one I'm going to look to short actually on a move up. So it's a limit order. I'm going to look to short it if it gets up to like 58.70, 58.69, which is this, major resistance area. And we're going to just put our stop loss above this resistance. And the reason I like to short this one is because when you look to the left here, obviously this is a major area of resistance, right? Every time it goes here, fails, you got a reversal candle. Then over here, failed. Then over here, failed. Then over here, failed. And this is what is really interesting, this big tail candle, which sometimes sets tops on these stocks. So right now, obviously, I don't want to short it. So obviously, we can short it under the 50 MA as well. So if it goes under 57, we can short and take it down. But I'm actually looking to see if I can get a better reward to risk entry, meaning if it goes back up around this resistance, we short, put our stop above all of this resistance, and then see if that's another potential resistance drop like we've already had. So looking for something like that. And when I take a look at the higher time frames, again, monthly charts, weekly charts, you can see a weekly topping tail at the double, triple top area. So I do like that reward to risk on this trade again, more reward to risk kind of a trade, and I'm always looking for shorts in this market. So that's one that I'm going to short as well. I would love to short the spiders and Qs as well, but this is not going to be a trade for this edition. I think around 390, right? So on the spiders around 390 area, I might be interested in a short. I'm also like Tesla short. I actually did short it on Friday. I bought some put options on it. It dropped down, as you can see here on a 5 minute chart. I shorted it right over there in the trading room with using options. It dropped in and we got out for a small profit because I wanted to sleep well in the weekend. I didn't want to hold Tesla. And who knows, maybe we wake up Monday, this thing is gapping up to $1,000 and Tesla can absolutely do that. So that's why I didn't short it, but I am definitely, this is on my watch list as a top short idea for 2021. But again, I don't want to get in front of a freight train and get crushed. But you can see monthly, it's really extended from the 9 EMA on the monthly chart, really away from the weekly 9 EMA. So I think, we'll see what happens on Monday. If it gaps up, I mean, if it goes to like $1,000 or something, then I'm definitely going to short it. But this is, again, not a trade for the faint of heart because Tesla is a crazy one. All right, but Tesla is definitely on my list as a potential short. So that's kind of all I have in terms of trades. Again, as I said, I have a lot of good-looking swing trades on the long side, but I just don't want to go long too much in this market. So that's where I'm sticking at. So I'm in the boat of I'd rather be out of a trade wishing I was in than being in wishing I was out, if that makes sense, right? So I'd rather be out of a trade wishing I was in than being in and wishing I was out. So I do have FOMO when I look at all these patterns, but I'm like, you know what? We're going to manage risk. That's the number one priority for a trader. All right. So financial sector, I think 2021, they're going to be pretty strong. And yeah, financial sector is basically back into all-time highs. Financial sector looking really strong. Energy, I think energy sector could make a comeback in 2021. So definitely keep an eye on that. I think energy sector is going to make a comeback in 2021. Had a double bottom on the monthly. And energy actually looks pretty good long-term as well. And as far as long-term investments, I think I already let you guys know, I think in the last edition of the newsletter and the one before, that I like marijuana stocks, right? For 2021, I think marijuana is going to be outperformer in 2021 because you can see it's already been legalized in a lot of states and now the Democrats won the Senate. So basically legalization is just a matter of when. It's not a matter of if, it's just a matter of when. And you can see here, since I told you guys 2-3 weeks ago, cannabis stocks have been ripping. Remember GNLN? Right? I told you guys that I bought it long-term around over here. I mean, that one's up pretty nicely. I bought this VLNCF, right? I told you guys about it here. I bought it around there, 130. That one's up nicely. This is one that hasn't moved yet. This is another one I'm in long-term, CRTPF. Tilray, remember we talked about it around $8 that I bought it long-term. I'm still in it. Still in full position. Didn't sell a single share. Still in it. It's at 12 something. I'm in this SWHZ that I bought around $1.50. That one's up around $1.83. JUSHF, I think I bought it. Where did I buy it? I think I bought it around $5. So bought it late, but it went up to like $6. And then yeah, so those are the long-term trades that I'm in. CGC is the only one that I sold. And why did I sell it? Not because I don't believe in it. I sold it just because, well, I'm in like 1,000 cannabis stocks. And I was like, you know what? This one's up. I was up like $4,000 or $5,000 on it. I'm like, you know what? Let's just take it. But CGC is one that we talked about. I bought it long-term swing trade right on this day at the 50-period moving average. Sold it on this day above 3150. This is one. I remember this is one other one we talked about long-term. I told you guys I bought it long-term around $23, $22, and it's at over 30. And guess what? I'm still holding every single share because I think this one could go much higher. So this is another one. We bought around 23. I'm still in every single share of this stock, AIRWF. So those are some of the trades. What else? I did buy some silver, not really long term, but silver had a pretty massive drop on Friday. So I took advantage of that and I bought a little bit silver, picked up a little bit silver around $23. And just, we'll see what happens. But I picked up a little bit silver, looked appealing to me with a stop loss under 2150. What else? Long term, what do I have long term? Let me take a look at my portfolio. MBI I already talked about. I am really interested in Triple D and FireEye long term. because again, this isn't you and I buying. This isn't average Joe buying. This is institutional buying on FireEye, right? This is the same thing on Triple D. This is institutional buying. So if I can get a pullback on these stocks, I would love to buy them as well long term and forget about them. Because again, daily chart, you look at it very extended. You look at the monthly. I mean, this used to be a $95 stock and it's just getting out of this sideways base. Look at FireEye. Used to be a $96 stock, just getting out of the sideways base. So I think 2021, these could be outperformer stocks. I would look to buy any pullbacks on those. I'm already short a lot of puts on these, meaning I shorted puts down over here. So if it comes down, I get to own it there. If not, I get to keep the money that I sold them for. So those are long-term trades. I am also in, INAC. This is another trade I'm in long-term. This is an SPAC, an SPAC. So I bought this thing around 1470 something area. Yeah, somewhere around 1470. Originally I bought it around like, under 14. I sold it at 15 and then I bought it back at like 1470. And this is when I'm in long-term. I think this thing goes to $35 eventually this year. This is owned by Mark Cuban. This is Mark Cuban's corporation. So, I mean, again, I think he's going to support the prices, and it's been, nicely uptrending on the SPAC. So, again, I don't think it's too late to buy this thing. I think this eventually goes to 35, which is almost a double from these current prices. So, so I own this INAQ. My target on this is $35. Twitter long term, my target's like $30. And let's see what else. FireEye and Triple D I already talked about. MBIO probably $7 to $10 on MBIO long term would be the target. For the marijuana stocks, I'll just give you my targets on these. GNLN, I have no target on this one. I'm just going to hold on until the company keeps doing well. VLNCF, again, I have no target. I don't have any target. The only trades I have targets for is this JUSHF, which I think is a $35 stock in a 1 or 2 year time frame. So JUSHF, I think $35. I have a target on it. I also, this one also forgot about that. Remember I told you guys this one as well. I bought long term right around the 50 MA. GWPH, that one's been looking pretty good as well. The only one I have target for is out of my long term positions is this JUSHF around $35. This AYRWF, I think $50, $50 to $100 would be the target. But obviously if it goes crazy and goes to like 35, 40, then I don't mind selling it and then buying it back on a pullback, right? But long-term target, probably 50 to $100. But short-term target, I would say, $35, sell it and then buy the next pullback around 30 would be my game on AYRWF. INAC, I already gave you guys the target, which is $35, and that's about it. If I missed anything, let me know. But so that's kind of what we're in, guys. Hope you guys are doing great out there. Stay safe. It's going to be a crazy year. I mean, if you thought 2020 was crazy, this year is going to be crazy year. So wish you guys all the best. Take care, and I will see you guys in the next edition of the newsletter.